This is Business Report Africa, brought to you by your digital first Pan-African network, TOS TV. Cost of ivermectin soars after research suggests 75% chance of cutting COVID-19 deaths. Lagos State 2021 budget of 1.16 trillion naira will be driven by aggressive taxation. Kenya Power supports 55,000 SMEs with smart meters. Prospects of improved support from US bright under Biden. CBN to prevent exporters with unrepatriated export proceeds from banking services. Oil prices drop amid fears on energy demand soften. High cost of feeds threatens Southwest poultry farms. And Unilever Nigeria declares loss of 1.59 billion naira in 2020. We begin with business news, where the rush to purchase ivermectin in Lagos has increased as Nigerians' caseload rise past 120,000 cases. Some Nigerians are increasingly worried about contracting COVID-19, rushing to pharmacies to purchase a drug that they all believe is the most potent to fight COVID-19. Now, according to the World Health Organization, ivermectin was originally produced in the 1980s as a veterinary drug used largely for netadots control in cattle, horses, pigs, and dogs, and became the standard for control of the ectoparasitic disease, scabies. It soon became the world's most profitable veterinary drug. Now, since then, ivermectin has been used on humans for controlling human pathologic parasites causing ringworms. Now, according to medical sources, it's also known in the US as trade worm, UK and Australia as pinworm. Now, originally, it's a worm expeller used in the elimination of parasite worms from the body. It is used in combination with doxycycline. Now, however, more recently, the drug is now being used for the treatment of COVID-19, pushing demands for the drug high across pharmacies in Lagos. A recent survey suggests the drug cost as high as 100,000 naira, since there were claims that it could reduce COVID-19 deaths, although there has been no official medical statement supporting this claim. Now, staying with developments in Lagos, where the state thrives as the economic backbone of Nigeria and with its GDP rivaling African nations following the impact of COVID-19 pandemic from a proposed budget of 1.169 trillion naira, the state reviewed it downwards by 21% to 920.5 billion naira, out of which it was still able to attain an overall performance of 86%. Now, total revenue alone was 93% of projections, and this is despite the pandemic, the additional costs of the EndSARS protests, as well as the other disruptions that followed. Now, as the Lagos State Commissioner for Economic Planning and Budget, Sam Egbube, puts it, excuses build bridges to nowhere. Now, the total budget of 1.16 trillion naira is expected to be funded from a total revenue estimate of 971.028 billion naira, made up of total internally generated revenue, TIGR, of 723.817 billion naira, capital receipts at 71.811 billion naira, and federal transfers at 175.400 billion naira. While the figures for federal transfers and receipts are said to have been conservative, the breakdown assumes that a key part of the budget is expected to come from the state's internally generated revenue, IGR. Now, during the official budget speech, the commissioner of the Lagos State Ministry of Economic Planning and Budget had explained that Lagos State's Internal Revenue Service, LIRS, performance is expected to increase by 30% in 2021. Now, on one hand, systems such as simpler collection systems are being tightened to boost revenue. On the other hand, more companies will remit taxes, with many tax holidays from 2020 taken care of in the past year. Now to Kenya, where Kenya Power will supply smart meters to 55,000 small and medium enterprises, SMEs, across the country in a project that seeks to boost efficiency. Now, the 1.25 billion shilling World Bank funded project is part of the Kenyan Electricity Modernization Project and is expected to be completed by June 30th of 2021. The new metering system gives customers access to real-time information on their consumption patterns and billings, thus allowing them to assess their energy usage through an online customer portal. Now, Kenya Power Managing Director Bernard Ngugi said in case of any outage, the smart meters are able to communicate directly with company's national contact center, which facilitates immediate resolution. This will enhance efficiency as teams are alerted promptly. Additionally, the smart meters also send a notification to the customers via SMS, said Ngugi during the launch of the project in Kisumu County in Kenya. Now, still talking about support, the question is, what are the economic implications of Joe Biden's presidency for Nigeria? Now, there is likely to be some positive changes as far as bilateral economic and trade relations are concerned. Now, the U.S.-Nigeria Binational Commission, which has been in place for about 10 years, is likely to gain some traction on the Biden administration. Now, given the strategic position of Nigeria in Africa and given the favorable disposition of the U.S. Democrats to Africa, this is a valuable platform that can be used to promote and deepen cooperation in many facets of governance. The Africa Growth and Opportunities Act, AGOA, which gave duty-free access to Africa products into the U.S. market, but due to weak export capacity and competitiveness, not much could be made of it. Now, also, the energy policy of the U.S. focusing on energy security, oil has partially no place in the U.S. market, hence nothing much has been happening. However, Nigeria remains the second largest trading partner of the U.S. in sub-Saharan Africa and the third largest destination for U.S. foreign direct investment, FDI, in the region. All of this points to the prospect of further growth, provided the necessary impetus are put in place and the right policies to attract investment. Business Report Africa will be right back after this short break. Do stay with us. Welcome back. Let's take a look at trade. Now, the Central Bank of Nigeria has announced the prohibition of all Nigerian exporters who are yet to repatriate their export proceeds from banking services effective January 31st, 2021. Now, the Apex Bank has a standing policy that instructs exporters to repatriate exports within 90 days for oil and gas and 180 days for non-oil exports constitute a breach of the extant regulation. Now, analysts believe that the directive is part of a monetary control mechanism by policymakers to maintain relative stability in the exchange market, especially after the pandemic created a wide disparity between the official exchange and the parallel market rates. Eliminating incident incidents of over-invoicing, transferring pricing, double handling charges, just to name a few. Now, in a bid to ensure prudent use of foreign exchange resources, the Central Bank of Nigeria had earlier instructed authorized dealers and exporters to only open Forms M for letters of credit, bills for collection, and other forms of payment. And now to commodities, where oil prices fell their most in a week after the first U.S. crude build in 6 weeks on the fear that the world's largest economy might distort energy demand supply balancing. Now, U.S.-based oil contracts, West Texas, intimidated loss 1.6% at $52.27 per barrel. It was WTI's worst daily plunge since last Friday, when it fell at 2.2%. Now, oil prices look a tad vulnerable to potential profit taking after U.S. crude stockpile bearishly rose 2.56 million against consensus draw. Now, simultaneously, the near-term China crude demand forecast looks high and susceptible to revision lower as lockdown spreads in the country ahead of the lunar year. While oil traders are through longer lockdowns on the premise that vaccinations will quickly lead us out of the pandemic, COVID mobility clampdowns still hurt the very near-term view. Now, since calls for a commodities super cycle have many after the November vaccine turnaround, open interest in Brent and WTI has increased largely, and suggesting that the market remains very susceptible to any potential bearish headlines, big or small, from a position perspective only. Now, OPEC production at the moment remains well below the level required to meet anticipated demand. It should continue to drive a reduction in oil inventories as the global economy gradually recovers. Now, as predicted last December by the national body of the Poultry Association that it might shut down production this month, the Southwest Wing of the Poultry Association Nigeria, PAN, has raised an alarm on the imminent collapse of the industry anytime soon. Now, currently, over 2 trillion naira investments and 10 million jobs are already at risk, as the farmers are finding it difficult to sustain over 50 million layers, 100 million broilers, 1 million breeders, and other classes of poultry on the next harvest season. Now, the challenge facing the industry is due to the astronomical rise in the cost of maize and soya beans, which are the main components of feed used for poultry production. A ton of maize, which hitherto sold for about 85,000 naira a year ago, currently costs between 145,000 and 160,000 naira, while the price of soya beans has risen from 130,000 to between 215 and 250,000 naira. Now, following the sharp increase, the cost of feed increased from 3,000 naira in March to between 4,600 and 5,300 naira in March. The cost of poultry industry feed, which contributes 75% to production costs, has risen by 75% within 9 months. Now, the association, which raised the alarm in Ibadan, Oyo State, Southwest Nigeria, through its General Secretary, Dr. Olalekan Odunsi, said as the region's poultry representing more than 60% of the national poultry population is threatened, the federal government should, without wasting time, approve the importation of animal feed grade of maize to sustain the over 50 million layers, 100 million broilers, 1 million breeders, and other classes of poultry until the next harvest season. Now, let's go to the stock market, where Unilever Nigeria PLC, a leading consumer goods company in Nigeria, declared its unaudited annual financial report that it made a loss amounting to 1.159 billion in the year 2020. Now, this is according to the information and figures disclosed in the company's unaudited financial statement published by Unilever on the website of the Nigerian Stock Exchange. The report revealed that the loss which Unilever made in 2020 was 62.3% lower than the loss it made in the preceding year of 2019, as the company company's loss after tax declined from 4.22 billion naira in 2019 to 1.59 billion naira in 2020. In line with this, the revenue of the company increased by 1.34% as revenue from the sales of tea and savory in the food products segment of the company increased during the period under review, while sales of skincare, oral care products, fabric care, and household cleaning products declined in 2020. However, it is important to note that impairment loss on trade receivables, selling and distribution expenses, as well as the marketing and administrative expenses incurred by Unilever completely eroded gross product of 13.78 billion naira to the tune of an operating loss of 3.05 billion naira. Now, this went on to impact the profitability of the company in 2020 as Unilever reported a loss of 1.59 billion naira despite doing well to keep finance costs low, and by so doing reporting a net finance income of 1.25 billion naira. Well, thank you so much for watching Business Report Africa. Do follow us on social media at TOS TV Network on Facebook, Instagram, and Twitter, and like and subscribe to our YouTube channel at TOS TV Network. You can also watch TOS TV News on TSTV channel 138. I am Nkamian John. Have a great day.